Hello friends, how are you all? So let us continue international economics. This is the 12th video of this particular lesson. We will learn about euro bonds, foreign currency convertible bonds, and a few more concepts in this particular video. So let us begin with what are euro bonds. Okay, you must have read this word somewhere in the news or when you are studying economics also. So what are euro bonds? Let us understand. So see, euro bonds are not debt taken from Europe or by Europe. Okay, they are also not debt taken in euro currency. Okay, necessarily. So it's not necessary that euro bonds are debt in euro currency, or loans taken in euro currency, or they are the debt taken by Europe or from Europe. So it has nothing to do with Europe or euro. Okay, but still they are called euro bonds. They are not directly related to euro or Europe. Basically, euro bonds refer to the loans taken in foreign currency, which is neither the currency of the issuer nor of the country where it is issued. I will explain it to you with an example. A euro bond example is this: a bond issued by Indian corporation in European markets denominated in US dollars. So a bond, say for example, issued by Reliance company, which is an Indian company. These bonds are issued in European market, say in France. So the France local currency is euro, but these bonds are denominated in dollars. Okay, bonds are denominated in dollars. So the local currency of the issuer is rupees. The markets where it is getting issued, the currency is euro, but the bonds which are getting issued is in the third currency, that is dollar. So such bonds are known as euro bonds. Okay, so it is a bond issued by the issuer in a currency which is neither the currency of the issuer nor of the country where it is issued. So I hope you have understood this. And if it is denominated in dollars, US dollar, it is known as euro dollar bond. If it is denominated in Chinese renminbi or Chinese yuan, it is known as euro yuan bond. Okay, so these are the different terminologies used, but understand that euro bonds are the bonds which are issued by the issuer in another country, and the denomination of that bond are not the currency of the issuer and also of the markets where it is issued. It is a third currency. Another important feature of euro bond is that it is a fixed interest rate bond. Okay, it is not fluctuating or floating interest rates. It is a fixed interest rate bonds. It is issued by private companies, international agencies, or governments also. So euro bonds are also issued by governments, by private companies, and international agencies. The maturity is 5 to 30 years. Okay, so the tenor of bond is 5 to 30 years. So they are the long-term securities. If an Indian company issues rupee denominated bond outside India, it is called masala bond. Okay, so it is an offshoot of euro bond, but only difference here is that the denomination is in rupee. So the Indian company, so the currency in which the bond is denominated, it is the currency of the issuer here, but it is issued outside India, for example USA, and such bonds are known as masala bonds. So there is no exchange rate risk for the Indian companies because they are issuing the bond in rupee terms. They will have to pay back in rupee terms only, so they don't have to face the currency risk. Now the next category of instrument we are going to see is foreign currency convertible bonds. Okay, and see, again, these are all part of foreign investments because foreigners and non-residents are going to invest in this. So another category is foreign currency convertible bonds. Again, the name itself suggests foreign currency, meaning they are denominated in foreign currency, and they are convertible bonds. Okay, so we have to note here that the euro bonds, okay, which we have seen, euro bonds, external commercial borrowings, are issued as debt instruments where they were non-convertible bonds. Okay, so they were actually the debt security, 100% debt. They could not be converted into equity. But there are another type of bonds which are known as FCCB. FCCBs are issued in foreign country, denominated in foreign currency, and are convertible into securities upon maturity. Okay, for example, Reliance company is issuing a bond in USA which are denominated in US dollars. Okay, and these bonds are convertible into equity upon maturity. and here it is an optionally convertible bond. It is not a compulsorily or mandatorily convertible. So investors have the option to convert it into equity. Okay, so they are optionally convertible. They are not mandatorily and fully convertible. So they are optionally convertible. They can be fully convertible, but it is option given to the investors whether they want to convert or not. So they can get their principal amount back along with interest, or they can convert the bond amount into equity amount at a fixed rate of conversion. So that is an option. We already know the meaning of conversion from bond to equity. Then the next type of bond that we have to study is the foreign currency exchangeable bond. See, it was convertible bond. These are exchangeable bond. Now, what is the meaning of exchange? We will see. So again, it is issued in foreign country and denominated in foreign currency. For example, Reliance company, it is issuing a bond in USA denominated in US dollars. Okay. So see, if these are denominated in foreign currency, there is always a risk of foreign exchange, right? So there is always a foreign exchange rate risk. So exchange rate risk is always involved in issuing such type of bonds. Basically here 3 parties are involved. Okay, 3 parties are involved here. So one is the issuer company, one is the investors, and in between there is a third entity which is known as offered company. Issuer company meaning the company which is issuing bonds. So this company is issuing bonds to the investors in foreign, and these investors are basically paying money to this issuer company for their bonds. Now what is the role of this offered company? We'll see. See, issuer company holds shares of the offered company. So if there is an offered company and issuer company has shares of this company, okay, they are holding shares of this company. Example, Reliance Corporation is the issuer company and it is holding shares of, say, Reliance Retail Corporation. So Reliance Retail Corporation is another company and Reliance Corporation is another company. Reliance Corporation is holding a share of Reliance Retail Corporation. Now investors in bonds issued by Reliance Corporation, that is this first company, have an option to exchange the bonds into shares of the offered company, that is Reliance Retail Corporation, which are held by Reliance and listed on stock exchanges. Okay, so basically this issuer company, they are holding the shares of offered company, they are issuing the bonds to investors, and upon maturity the investors have the option of exchanging this bond for the shares of the offered company, and these shares are held by the issuer company, and now these shares they can exchange it with investor in place of the principal amount of bonds. Okay, principal and interest of bond. So that is what is the FCEB. So FCEB was started in 2008. So basically see here what happens, why these investors will do it, because investors now they are interested in getting the shares of the offered company and not the issuer company. Okay, so they are interested in shares of offered company. In foreign currency convertible bonds, the bonds could be converted into the shares of the same company which was issuing the bond. But here the investors are interested in getting their money converted into the shares of another company which is the offered company. Okay, so that is where it will be used. So this was started in 2008 in India. Minimum maturity value of FCEB is 5 years. Okay, this is the minimum maturity and it can only be done through the approval route of RBI. So there is no automatic route allowed. Any issuance of FCEB has to be approved by the RBI. So it has to go through the approval route. This is the rule as of today. It can change in future, but this is what is the rule in 2022 as of today what we are talking. Okay, so this was about the another 3 types of instruments when it comes to foreign investments. We will continue in the next video. Thank you.